Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 5th, 2007. Well, today was Wednesday, folks, and as we talked about yesterday in the video, we basically got it back into full swing with the markets. You had everyone's, children were back in school in the United States, and we really got back into the full swing of things. And that meant more volume in the market. And we had preached to you guys for the last week plus, based on the light volume up moves in this market, saying every day, guys, be aware, this is light volume. This is volume that's not necessarily the normal volume for a market, and it allows the big money to keep this market afloat, to push it up, to get the longs, the amateur longs back on the bullish side before they take this market down again. And what did we see today? We saw increased volume, number one, which caused the markets to sell off. And we saw a lot more downside volume. And just like before this move up came, when we could short every rally virtually, to today in the market, intraday, if you were playing an intraday game, you could short every rally, guys. We rallied up a little bit, and they smacked it right back down. Rallied up again, smacked it right back down. And that was pretty much the way it was. So we're going to get right into it here. And as you guys can see right here, this is the NASDAQ chart. Here's the gap down right here. We gapped down on the NASDAQ intraday. We sold off more, dropping us down to basically 26.05. We rallied a little, and again, short every rally. We took it down again to a double bottom. They rallied it again, took it down even more, broke that double bottom, and came down here, rallied it a little, sold, rallied, sold. So it was a constant just fight back and forth, back and forth. You'd see a little bit of buying pressure, a little bit of buying volume come into the markets, and then right away you'd see selling pressure come right back in and take that market down. And that was virtually what happened all day. And I'm going to flip to the ES futures chart and go over this again. And you can see this a little clearer in this market. What you see here, folks, is the sell-off on the open. We had that initial gap down. This is a gap down, by the way, guys. We were actually up here in the markets. And we gapped down here. We sold, bounced, sold, bounced, sold, bounced, sold, bounced, so forth. So you guys get the general idea here. And what you're seeing here, as I talked about in multiple videos ago, every video I pretty much mentioned, when it's light volume, they can float this market up. Well, today was back to the normal trading volume. The kids were back in school, the traders were back at their desks after extending their holiday that extra day, which was yesterday, and we were back to full force. Now, we still saw somewhat lighter volume than we're used to in a normal trading scenario, but it was heavier volume by quite a bit, rather compared to the prior days as we saw over the last week and a half. And what do I mean by that? Well, the ES contracts traded about 2 million contracts today. And what did we do yesterday? We did 1.5 million. So right there, you're seeing a 33% increase in volume. All right. And what does that do? It doesn't allow the light money to keep the market up as much. Plus, if there's more volume in the market, big money can sell into that volume, taking their profits or whatever they're up in this market. All right. So that's allowing big money to unload positions because more volume lets them. Plus, when you have this light moves up on light volume like we've had recently, it allows the amateurs, and you guys know I preach about not being one of these amateurs. You don't want to be one of these guys who yesterday was thinking, yeah, we're going to new highs. Because, yes, we might see another move up because we don't see this big move coming really until early next week to the downside, but you just don't want to be bullish going into this and be buying all your positions here. All right, it's just not a wise decision considering the daily chart looks like this. You're obviously going to have at least a little pullback, and that's what we saw today, folks. So what I want to show you guys a little more is just what was going on today. Again, we had 2 million contracts traded, which is a 33% increase from yesterday's volume, which again, that bigger volume lets the markets do what they're really supposed to do. And what you saw here is, and I want to point this out, yesterday we had that sell-off into the close. We didn't really have that today, guys. We had a little bit of sell volume, this one candle here, which was bigger than the others, but again, these two greens on either side negate that as far as I'm concerned. So you didn't see that same selling pressure that we saw the last few days. But yesterday, what we did see is we saw 1.2 million contracts traded until about 3:30. And then 300,000 in volume came in on that sharp drop. And again today, so really what I'm saying here, folks, is that we did 2 million contracts today. Really, before that sell-off yesterday, we only did 1.2. Anyways, it's a moot point at this point, guys. We're still in the flux here of getting ready to roll over, in our opinion. And again, this is just our opinion, and always consult your financial advisors before making any decisions. Okay, folks? Now, what did we see again today? Let's look at the daily NASDAQ chart. I want to just point out a few things. Here on the NASDAQ, and again, I've always said the NASDAQ's been the strongest of the strong, guys. Of all the indexes, if your money has to be somewhere, it should be in the NASDAQ because it's been leading. All right? Technology's been leading here, And what did we see? We saw this nice little tail right here, which is we call a lizard, and it's a buying tail, and the move up you got here was tremendous. Then you had a small little dip here, and now another move higher. Now, what you're doing right here on the NASDAQ is sitting right on the 50 moving average, which is support now. Alright, so that's the NASDAQ chart. However, if we bring up the SPY, what do we see on the SPY? And the SPY is basically mirroring the S&P. Alright, and what do we see here? We see that the SPY and the S&P and the Dow, much, much weaker indexes overall. And that's what you're seeing here. Look at the 50 moving average. In fact, we basically closed on the 50 yesterday, and we're below the 50 as of the close today. So that's showing weakness. It's also showing a possible move down here to the 20 moving average. However, we do, as you guys know, we've been saying all along that chances are we're going to come down, take out that 20, and go back to the lows here, at which point we'll reevaluate, but we could go even lower. Okay, now, as we've been talking here along, you guys know we were talking about, a lot of you asked about possible inverted head and shoulders. And this is a decent head and shoulders, but the reason why we don't put too much stock in this head and shoulders, let me get out my tools, and this will be like the little lesson for today. You have a nice shoulder right here, right? Look at this nice shoulder. Alright? Then you have the head and head. Okay? So here you have a shoulder, head, and then a bunch of people were like, well, why isn't this a shoulder? Well, comparison-wise, let's just look at that right here. Look at the size of this shoulder, okay, guys, compared to this other one. Now, again, if you're looking at it from a technical aspect, yes, it could be, but you always want to put percentages in your favor. It's your best trades are always going to be your ones that your percentages are 80 to 90% winning percentages. And if you can find trades that are always 80 to 90% winners in your book, you know, you're always going to have the best. And again, you're putting all the technicals in your direction. And the only thing that bothers us here is that this shoulder is just really a dip and a buy. Dip, buy. As opposed to this solid, this is a great shoulder over here. So the thing that we're saying here is a lot of you guys were saying, well, what about this inverted head and shoulders pattern? And the only thing we say is, yes, technically, you could see a little bit of a shoulder here if you want to do a little bit of a stretch. But again, we'd like to see a little longer base. You really want to see a shoulder that looks more like this. You want to see a shoulder that matches this side almost, then the breakup. Okay? So again, just take that for what it's worth. We do say this is technically from the pattern, it's a head and shoulder. It's just not a very good one. And that's what bothers us. Alright, folks? Now we're moving back to the NASDAQ chart right here. And again, you see much more strength here because this was able to get above the 50 moving average right there. However, the stochastics are toppy at this point. And you want to be realistic about that too. And that's why a lot of people are saying, well, we're going to go straight up here in any chart. And we keep on saying, well, guys, you always want to have at least a little bit of a dip here on the stochastics because the stochastics have to be able to go back up. And that's key in technical analysis. You have to have all the technical indicators, and I've said this multiple times, all technical indicators, or as many as you can, be in your favor because that's just putting the odds that much more in your favor. So whether you're using a MACD, an RSI, a money flow index, stochastics, moving averages, the 20, the 50, the 200, you want to have as many of those in your favor on a trade. So again, we're looking at choppy trading coming into these next few days. And again, we could see a little bit of a sell-off start here, but we generally tend to think we're going to see this choppy sideways moving. Maybe an upward move, maybe a downward move here. But in general, let's go back to the SPY chart because that's the weaker of the two. And let's just clear out a couple of these lines here. You're going to see a sideways to up, sideways to down move right over here. Again, hovering right underneath this 50 moving average. We'll see if we get above it. We're not too worried, though, on the move up. You know, a lot of people are calling the bottoms, and I want to be clear on that, guys. A lot of people on TV and a lot of people who have been messaging me saying, guys, this looks like we're going straight up. Should we go long? Should we go long? And I keep saying, guys, be a little careful here. You don't want to just jump off a cliff here. We've already rallied this much up. You're already losing out on this amount. Think of it logically. Think of all the issues in this economy. Eventually, we need that another move down, and that looks to be what we're seeing early next week. Okay, guys, last of all, I just want to talk a little bit about the chat room. Phenomenal chat room today, guys. I just have a great time in there. So many people are picking up so many things. It's kind of like all my teachings, all our teachings from InTheMoneyStocks.com are getting passed on to everyone. And it's wonderful to see because people are grasping our different types of plays. People are understanding the technical analysis. And it's just great to see. Great chat room, great learning experience. You'll make a little money on the side as well doing some of the plays we call out. We have a bunch of great traders in there calling out all the plays they're doing along with us. And it's just a wonderful learning atmosphere. So I encourage everyone to join up. $199.95 a month. You can't go wrong. In addition, guys, be aware, we are raising the price. We've had so many subscribers come on board lately that we are going to be raising that price soon. So anyone that's currently with us is obviously locked in. So I do encourage you, if you're going to sign up very soon, because probably by the end of this week, maybe next Monday, the price will be higher. We also added in a 6-month subscription and a 3-month. If you do those, you obviously save quite a bit of money by doing the longer term. In addition, the swing trade alerts are just phenomenal. Keep on rolling out great plays. And with this fall coming, be ready because the swing trade alerts are going to capitalize on this fall. Have a wonderful evening, guys. We'll talk to you soon.